So this video is going to be one of the best videos to ever be released on YouTube, and today I'm going to explain what I posted on Twitter, where I said the daily candle is going to print a swing low on the 4-hour time frame, and the 4-hour candle is going to print a swing low on the 1-hour time frame. So for example, this is the daily time frame, and before we trade our third candle, we want to get a perfect candle 2 closure, and all of this should happen at a PDRE. You should take note, if it does not happen at a PDRE, then we are not going to consider trading that swing point. And what PDREs are we going to use? The PDREs we are going to use are internal range liquidity and external range liquidity, with internal range liquidity being our fair value gap and external range liquidity being an old low or old highs. So let's say that price comes to your PDRE. Let's take this as internal range liquidity, and then we get a perfect candle 2 closure. Now, why is this a perfect candle 2 closure? It took the first candle and then it closed inside. So when we get a perfect candle 2 closure, then we can expect the third candle to be a strong distribution candle. In this scenario, a strong bullish candle. So we can focus on trading this third candle, right? And then we want this third candle to open at the upper half of this previous candle. And how are we going to know that? We are going to mark this previous candle with our Fibonacci 2. And then we want this candle to open at the upper half. When it opens at the upper half, that signals a continuation, and that makes your setup more probable. So now this candle, right, this daily candle is first going to form by printing a low first, and then it will distribute to print a high. So this is a bullish candle. So open, low, high, close. So while this candle is printing its low, for this candle to fully form a low, it is going to print a swing point, and then that swing point will force the candle to distribute. And when it is printing its high, it will print that high by forming a swing point and then close. I hope you get it. So every candle is made up of that, and when you go to the chart and then you look at the market, you get to realize that every reversal starts by printing a swing point. And in a scenario where you don't get a perfect candle 2 closure, let's say your candle 2 is failing to close inside the range of the first candle, then you have to wait for the third candle to print. And if the third candle prints so strongly, then you can look at the data of the third candle to trade the following candle, provided your drawn liquidity is still intact. So from the daily time frame, we go to the 4-hour time frame. So this is our daily candle that we are expecting to be a distribution candle, and this daily candle is going to form its low by printing a swing point on the 4-hour time frame. So when you go to the 4-hour time frame and the 4-hour time frame isn't clear, then you don't have to trade that pair. That should be a rule that you should add to this model. If your 4-hour time frame isn't clear, move to the next pair or avoid trading. So when you go to the 4-hour time frame, you identify a PDRE, and then on the 4-hour time frame, a new daily candle is going to print at 17 EST, right? So when this candle is printing, mostly we are going to focus on the 1 a.m., the 5 a.m., and the 9 a.m. candle. These are the times that we are going to focus on trading, or we are going to focus on profiling the direction of the market. So when you identify your 4-hour PDRE, you want to also see the same thing happening in the 4-hour time frame, supported by a PDRE. And this PDRE can be your internal range liquidity or external range liquidity. The market is fractal. So this daily time frame is going to print its low by forming that same signature, and immediately we get a perfect candle 2 closure on the 4-hour time frame. Then we will focus on trading the next candle. So for example, let's say this is your 1 a.m. candle, and let's say this is a 5 a.m. candle, and let's say you've identified a PDRE. So when you get a perfect candle 2 closure by the 5 a.m. candle, then we can expect the 9 a.m. candle to be a strong distribution, right? And to trade this 9 a.m. candle, we can go directly to the 50-minute time frame and look for a CISD to trade the 9 a.m. candle, or you can move to the 1 hour time frame, right? So on the 1 hour time frame, let's say this is our 4 hour candle. This is our 4 hour candle slow. This 4 hour candle slow is going to print a swing point inside a 1 a.m. PDRA, and it is going to also print the same schematic. So when we get the same schematic, then we can focus on trading the third candle, and it is going to hit our drawn liquidity. So let's say this is the 4 hour 9 a.m. candle. That 9 a.m. candle is first going to start by printing a swing point, and immediately it prints that swing point, the distribution will start. So on the 1 a.m. candle, we are trading the 9 a.m. candle. And when you are trading the daily third candle, you are trading that daily third candle on the 4 hour time frame, and you are trading the 4 hour time frame candle on the 1 hour time frame. So when you move from the 4 hour time frame to the 1 hour time frame to look for that same schematic, which will represent the low of the 4 hour time frame candle, then you can take entries on the 5-minute time frame. If you don't want to do that too, immediately your 4 hour candle gives you that perfect candle to closure, you can focus on trading your third candle by going into the 50-minute time frame to look for your changing state of delivery, and then just take it. And that is how I've been trading these days. I just identify my schematic. When I get a perfect candle to closure, I first find my daily buyers, right, and get to know the direction of the daily candle. I go to the 4 hour time frame, identify my PDRA, look for my model to appear, and immediately I focus on trading this by looking for a CISD. And if you're in my Telegram group, you get to realize that's how I've been trading. I just go straight to the 50-minute time frame and then look for CISD. Immediately I get CISD, I enter and I target 2 hour. I target my drawn liquidity. Welcome to the second chapter of this video. So in this video, I'm going to explain what a perfect candle 2 closure is and what an imperfect candle 2 closure is. And when you get an imperfect candle 2 closure, what you are supposed to do. So in this scenario, as I always say, we want our model to be supported by a PDRA. And this PDRA can be internal range liquidity or external range liquidity. So this is an example of a perfect candle 2 closure. We could see this was our first candle, and we could see that this second candle took our first candle and closed inside the range. And when it closed inside the range, then we can fully anticipate that the third candle is going to be a distribution candle, right? So this is our daily time frame. When we go to the 4 hour time frame and the 4 hour time frame is clear and in alignment with the daily time frame, then we can also look for the same thing to happen on the 4 hour time frame, and then we can take entries on the 50-minute time frame, or we can go to the 1 hour time frame, look for the same thing and take entries on the 5-minute time frame. You should be able to identify which one you feel comfortable with. As a trader, I cannot decide for you. You listen, you backtest, and then you choose which one works best for you or which one you're able to see easily. So for this second scenario, there's an example of an imperfect candle 2 closure. So we could clearly see that here the second candle failed to close inside the range after taking the first candle's low and tagging a PDRA. So in this scenario, you have to wait for the third candle to print, and then you look at how the third candle printed. If the third candle printed so strongly, a strong distribution candle, then you can base on that data to say that the fourth candle is also going to be a distribution, provided your drawn liquidity is still intact. So you focus on trading the 4-day when the third candle closed so strongly. And in this scenario, you could see that we didn't get a perfect candle 2 closure. And when our third candle printed too, it wasn't a strong third candle, right? It was kind of a respect candle. So we have to wait for our fourth candle to print. And we could see that our fourth candle printed so strongly and our drawn liquidity was still intact. So because our fourth candle closed so strongly, indicating that the market still wants to go in this direction, we can focus on the fifth candle and then say the fifth candle is going to distribute. So to trade this fifth candle, Then we are going to apply that same thing I taught in the first chapter, which is you go to your 4-hour time frame, you identify your 4-hour PDRE, and you wait for the same thing to appear. You wait for this candle to print its low in a 4-hour PDRE, and it prints its low by forming a swing point, right? And then on the 4-hour time frame, so if you don't get a perfect candle closure, then you wait for your third candle to print, and then you focus on trading the fourth candle, provided it is within the 1 a.m., 5 a.m., and the 9 a.m. candle, right? Because those are the time frames that we are going to be using, right? Those are the time frame that we're going to, those are the times that we're going to focus on in the 4-hour time frame, the 1 a.m., the 5 a.m., and the 9 a.m. Kindly subscribe to this channel if you haven't subscribed. According to the YouTube algorithm, most of you watch the video and do not subscribe, and that is not encouraging. Also like the video and share to others. Also look in the description box and join the Telegram group, and if you have any question, you can ask in the comment section or join the Telegram group and ask your question in the Telegram group. Have a nice day, guys.